All right, guys, glad to have you on board again today. We're going to be talking about this topic that, well, for those who are familiar with this channel, might not be new to you. We've been talking about that multiple times in the past, this kind of K-shaped recovery stuff that, as usual, I've been mentioning a hell of a lot in the past. I never expected this bear market phase, or call that winter, to eventually have lasted that long. I still think that now that is overdue, we kind of have enough data points to figure out what was the cause of this extended duration kind of winter mode in the markets. Because that's pretty much what we've been through. I would say there has been this massive switch from summer to extreme winter in just the span of a few months. There were no spring. There were no fall. Period. It was immediately going from full summer, all burnt out by sun, immediately to frozen landscape. And this is really, really very dangerous because it's been catalyzed by, of course, the massive cascading liquidations that just came out like just ending summer immediately by freezing everything around. But the thing is that, therefore, I would never have imagined back then anything else but a K-shaped recovery. And that back then was I said, that after these massive vertical kind of straight lines, I'm taking Ethereum as a reference here, it's pretty much the same on Bitcoin, we've retraced immediately from a bullish trend back down to a rising moving average, which I said, you can do whatever the fuck you want. I'm buying the hell out of this market out there. Period. Okay, do whatever it is that you want. Think that we're going to go even further in liquidations. I said it back then, video to prove it. The bottom is here. Do what you want if you want to go further. We've seen this kind of bonus extension with the FTX saga, which has brought Bitcoin below its actual moving average. But just for, as you can see, the sake of a short period of time, just I would say unforeseeable events. And as you can see, ETH has been more resilient on this matter. But still, what we wanted to mention is just put the kind of a grip on where we were during this kind of cold winter season. Absolute massive suite of events that would have been absolutely unforeseen by any normal constituted individual back then. We've all been fooled by SBF, and even though many have highlighted Luna as being a Ponzi, we never thought this would trigger some more cascading event, the 3A season and the like. Though still, this is a thing of the past. What we do here is not talking about what happened, it's just, of course, going further in the future, and forecasting is what I do. But the thing is that, yes, of course, we still need to pay attention to how did we came to where we are today. When I'm mentioning that we've gone through a through a winter phase, I would like to highlight that now that this one is clearly done, it's clearly terminated. So many people have doubted it for weeks, and I think now charts have been just proving them wrong absolutely brutally throughout the latest few weeks. And yesterday, just one of these days again, in which those narratives of Bitcoin King and Ethereum might not be too much of a thing, just turned out to be blatantly false. But at least that's not going to be today's topic. Today's topic is to say, well, just have a look at this winter season, understand where we are into spring, because we're definitely into spring now, and it doesn't feel any close thing to summer, so don't be overexcited for now. But this is exactly where I think we are now in terms of K-shaped recovery. The intermediate problem is just like as usual when you forecast seeing the market in the future, you can be damn right about the kind of price areas and stuff like that, but there's one thing you'll never be able to control. It's time. Timing the market is one of the most dangerous thing to ever attempt to doing. Instead, if you are more of an investor, this is where you actually dilute the time valuation. You just say, okay, I'm going to buy the thing itself and give a fuck about the price, but not giving a fuck about the time. That's really the way it goes. That's why investing is therefore considered to be a lower risk strategy than manipulating volatility. Because of course, volatility takes on either having market making capabilities, basically you make the market, or basically going to have to understand how market makers move prices, and therefore arbitraging volatility and stuff like that. This requires more advanced knowledge of technologies and stuff like that. And frankly, this is far riskier for an advised individual to do such a thing. So that's where we are. Out of summer, brutal, headed into winter with no fall in between. Now we're into spring. And of course, like I said, those who still think frozen times are going to go back there, we're too much euphoric or whatever. I mean, just look at the prices. If that is euphoric to you, then fuck it. We clearly are not euphoric. We're just K-shaped recovering. Exactly as I mentioned back then, the fall has been switched though there were reasons for me to believe that we'll immediately go from this massive winter frozen stuff back to spring very violently in this K form that I highlighted back then. That we would go back to kind of average value and then be able to range for an extended period of time until we get to the side, up or down. And there comes the K-shaped recovery phase that I mentioned back then. Turns out, as once again, forecasting doesn't prevent timing from switching. But like I said, the areas were still pretty much straightforward to me. That we'll go back to 2600 one way or the other, somewhat for Ethereum. And we'll go back to somewhat 40K or 38K for Bitcoin, which we currently are. So this was predictable for me, or at least very high likely probability to go back to these prices. The matter was just how long is it going to take? And I thought back then there were high probabilities to go there fast. After liquidation, we would go higher. Truth to be told now that we have sufficient data points to kind of figure out what the heck happened to change this narrative. Well, that's been the crypto cabal. And frankly, the US, I never would have expected to be them very aggressively against cryptocurrencies in such an open way. To have those regulatory framework to block this thing all around. Very violently. The SEC obfuscations and all of these things that now I think are also a thing of the past. This was the winter, the extended winter by those cascading liquidation and the extended duration of that winter period because of this regulatory crackdown, hands down on crypto by the crypto cabal. Okay, so that was really what this is all about, I guess. Now we're spring for a long time. Frankly, I think we're in spring since somewhat of April this year, which means we're pretty much already 6 months into the spring. So question is just how long spring is it going to last? Are we already switching to summer mode? Reason is I don't think so. And I'll try to explain everything about it. Because back then, like I said, the structure was, okay, after this brutal thing, going to go back to average, range a bit, and then decide higher or lower. Well, it turns out we've shifted time, which means to me, I think we've done range, back to mean, and the question is, well, therefore, there's going to have the K-shaped recovery. And the probability of having sideways action in here is therefore in the question to me. That means we've taken this time to range on the bottom. So are we really going to take time ranging the average prices is really the question I'm trying to answer now. And I think this is one question you should ask yourself too. What are the probabilities to go straight line on out? Though figuring out where the decision points are going to be, so Ethereum, the decision point is 2600, definitely 38K for Bitcoin. The question is, now that you have all those assumptions, let's figure out the probabilities. And how do I assess these? Though first and foremost, this K-shaped recovery is to me still variable. It's just, it figured out its way into somewhat of a different pattern, okay? So I would tend to say it that way. There are narrow chances that the assets won't range very long. I probably think a range is still required in this area, but is it really going to be as extended as I thought it would be? I frankly don't think it will. Which leads me to believe that, well, the option for a straight line up bull market, summer mode, yeah, probably very unlikely. Possible still, like I said, I don't give a fuck. If it goes higher straight line, well, go for it, but I doubt it. Otherwise, ranging in here and then doing the initial K-shaped stuff, which means two things can happen out of this. I think, frankly, that for assets like Ethereum and Bitcoin, the flat level, very unlikely, frankly. So it's going to be either we range and we go out of this range bullish with hell a lot of momentum, traction, Bitcoin halving stuff, whatever, who cares? Just too much demand, very limited supply, because there's one thing we've acknowledged very dramatically all across this bear market period, is there is no supply. It's nothing close to what we've seen back then in 2019 and 2020. There is really no available spot supply. So people better have to get to buy futures market trade, because if they do want the real assets, it's going to be tricky for them to find it. That's one thing we've acknowledged. So there are definitely some fueling factors for a potential absolute carnage to the upside if there is outrageous demand meeting by absolutely no available supply. Okay, but let's step that one aside. What we're going to be doing today is just talking about that K-shaped recovery, because I think that despite the number of times that I've been mentioning it, many people have been very misled by the understanding of it. Meaning that they just basically said it as everything is going to go back to the mean, and then we'll decide. So today, like we stated, we acknowledge the difference of timings, which leads me to believe that eventually that distinctive hesitation area of the initial K-shaped phase might be shorter due than expected, just to the fact that we've taken those assumption times in this extended winter period. So we might have a very short spring period, but still this is expected to take the form of a range, though I doubt straight line is a likely option now. I think too soon to say summer, but I wouldn't fight it against. I don't think this is going to be a cold spring, definitely not. Though, second thing I want to talk about is those D-shaped recovery. What are the probabilities for certain type assets to actually follow these guidelines? Because it's certainly not going to be, yeah, everything is going to go back to the mean and then we decide. No, some assets are absolute Ponzi schemes. They will definitely not go higher anymore again. Some assets have probabilities to get to this kind of anchor middle point, but some assets don't nearly have the fundamentals to break it above. To say some assets have the strength to go there, but will not have the bullish option for reasons that we'll explain today. I think Solanas and AVAX, for example, AVAX, are assets that cannot, frankly, go back to their all-time highs through this cycle for multiple reasons that we've highlighted. That doesn't mean they won't, that just means the probabilities of seeing them doing so is limited, and I'll explain why. Assets like Ethereum and Bitcoin, frankly, I think will get out of this to the upside because, well, they have kind of longer-term trends, which we'll explain. So, how do we differentiate that is the second question you should ask yourself. This educational series in here is, once again, I'm going to scroll through the assets that I personally get to trade. I'm a trader, and I'm not going to talk about things that I don't trade, ever. But the thing is, that doesn't mean the set of assets that I do trade needs to influence you in one way or the other. What you need to take out of this educational series is basically just take on the process that I have, understand that you need to build at least a similar one in terms of complexity to define and guide your decisions onward. That's really the way to go, okay? Inspire from what I do, just don't blindly copy, okay? So let's go through the assets, and you're clearly going to see the difference. The first set of assets, like I've said, are Bitcoin and Ethereum. There's no other ones able to perform like that. They basically have longer-term trends in the sense that they do have experienced these bulls and bear market before, and they do have an overlapping trend sequence. That means, well, they have higher highs and higher lows, and they do have some form of a trend sequence. That means, in the case of Ethereum, we do have an overlap of the previous resistance as a support. That's the typical stuff for a potential wave 5 extended higher time frame structures, which could eventually play its game into the monthly chart. So that's really the way to go, to say longer term trends than the actual underlying 4-year cycles that we've experienced so far. And there is a bullish sequence to this. We will see the same of patterns in here for Bitcoin, which has an additional cycle. And in here, we're going to have to use a logarithmic scale, which I don't like, but still, which would like to say, though, first things and foremost, Bitcoin and Ethereum are not the same things. Ethereum has a different life. Ethereum has a trend, and this trend is expected to be a wave 5 extend, so I expect Ethereum to severely overperform Bitcoin in the forthcoming cycles for these reasons. Bitcoin has its own longer-term secular trend, which means consecutively higher highs and higher lows, but there is no trend pattern. It's not a primary trend. It just means, well, Bitcoin is basically just an inverse denominator of dollars or euros or whatever. And frankly, I think this is all there is. There's not much more for Bitcoin than just, well, being the denominator, being trading against the denominator of fiat currencies. But that's it. Once again, for now, it's been a trend that's been consistently going up, and I don't see for now any reasons to trade against that. The reason is that if you look at the technicals, just like as we've seen for Ethereum, we're trading above rising moving averages and something. But there's one thing I would like to note, though. It's the first time in its entire history that Bitcoin has succeeded to trade and close. Okay, it's closed just once, context boxes, in here in, sorry, let me just give it the time, okay, in the end of the 2020 year, so the 22-year close, in here I think is a quarterly based update, so the fourth quarter of 2022 has been closed below the moving average. The moving average never gone negative, it's always gone rising, so I would say it's not a big deal, but this is still something to note. Ethereum didn't do such a thing, Bitcoin did. So I would say Bitcoin sent a message of long-term investors to say, well, maybe next time around don't be just as bullish as before. One thing is for sure to me, I doubt Bitcoin will not make and succeed on making new all-time highs this cycle around. If it were to be not happening, I would be concerned now for the longer-term trend of Bitcoin. But for now, well, everything points out to overarching demand, no supply like we stated before. I hardly imagine Bitcoin not to make all-time highs. Then is it going to go to staggering new highs and stuff like that? There's one kind of pattern seems to be consistently playing. It seems that diminishing return each and every bull market, which seems kind of consistent with logarithmic scale improvements. So I would tend to say we do have those logarithmic reduction that are going to play their games through prices. My target for the cycle remains the 120K somewhat. Or I would at least start to look for partial profit taking anytime I go all-time highs and just look for signal. I'm going to be driven by technicals to highlight my cycle investment for Bitcoin. But once again, I don't trade Bitcoin. I just don't try to buy and sell and buy and whatever. I'm just keeping them. So that's really the way it goes. Ethereum, like we stated, it doesn't have that kind of sequence over the long run. It's just in here we do have two breakouts which both failed. Okay, it's really up, down, up, down. The second consecutive correction just goes overlapping the previous resistance. That's the typical wave 5 extension of my trading strategy. So this is consistent with the trend, and all that tells us is that the final wave, the fifth wave, is generally the most violent one in terms of market excess, though I expect Ethereum to be absolutely outrageously excessive in the cycle to come. And there are the other ones now. So Bitcoin and Ethereum, what needs to take away out of this is that these two guys have longer term trends than the ones that we've played through to 2021. So long as they do have a structure, then these ones pass the test for an absolute high probability of going back to the average value. And then, of course, we can see whether or not they're going to succeed. But the probability of them to succeed positively out of those testable areas is pretty damn significant due to the overarching push there is from those longer term trends. On the contrarian side of it, you have assets like Ripple, and you're going to have to look at them in market cap relative perspective, okay? These guys don't have this high highs and high low sequence. As you can see in here, high highs are still there, but lower highs are also present. So there's one thing I can say. This thing doesn't trend. This thing is a range, and therefore I trade it according to any range. In here, I don't have any suitable pattern for Ripple. It's basically gone through the moon and now consecutively failed to break the new resistance instead. Though it's trading as a triangle, kind of symmetric triangle, and therefore anybody is having like stupid kind of forecast like, yeah, this thing is going to break into the moon. Well, I doubt it. I don't think it will. To me, I see it at a range and I trade it as a range. All I would say is that it traded once again below the rising moving averages, and there are two possible futures out of it. Knowing and acknowledging that the moving average is now flattened out, I would tend to say I don't feel like this is bullish. I think this is neutral at best. And so long as we do trade it that way, if it ever goes down to $100 billion market valuation, I will sell the crap out of it. That's really the way it goes. Though, like I said, I'm not buying it because I don't have any buyable structure in here. For those who are familiar with my strategy, there would possibly be what I tend to call a dumb pullback. This is really basically you build a range, you get to trade below the buyable area, just reverse the colors in here, it's supposed to be blue. Then you go into the dumb zone, which is in here, and then you pull back to the buyable area, and you got bullish signals with the rising context. So in here, everything would be kind of well aligned, but we've broken above the dumb zone. So I would tend to say, well, I would still be bullish on Ripple, but I doubt it we can ever trade above $100 billion. And if it goes there, I'm going to sell it. So that's really the way to go. I will also agree, for those who are buying, I would tend to say that this broken moving average is kind of a deteriorating signal. I would definitely have bought if this moving average hadn't changed that. I think now this thing is neutral at best, when other assets can bring significant rewards, and for the same amount of risk, the rewards being higher elsewhere led me to go elsewhere as well. Okay, so that's really the way to go. I'm standing aside from Ripple the cycle around for this reason. There are other folks out there, just like Cardano. As you can see, Cardano still face higher highs and still for now higher lows, but there is no trending structure. The problem with Cardano is just like we had a trend or an excessive market to the moon bro, followed by a massive crash going down to new lows, and then in the hand of it, another second consecutive breakout, not following any suitable trend pattern, and in here, same thing. The moving average is still rising, or I would say it's somewhat flat for now, when we've traded significantly below. So in here, as you can see, this is not an asset that trades above the moving average. It's really an oscillating thing. So am I bullish on Cardano for the cycle around? Frankly, not. Is Cardano a candidate to actually retrace back to the average median value for a K-shaped recovery like we aforementioned? That would mean retracing right up to somewhat like $50 billion valuation, which would require at least a 4x out of current prices. we would like to highlight the probability things of it. That means out of the currently traded prices, the longer the distance it is for your asset to reach out this even average value or metric, the lower the probability underlying this to happen. It's really the way to go. And we're going to take another few sets of example. Okay, for Monero as an example, retracing, yeah, we could use Monero as a quick example as well. As you can see, pretty similar stuff. This one doesn't trade below the moving average, so it's much better vehicle than Cardano would be. But the same thing, as you can see, there is no trending structure. There is no overlap or stuff like that like Ethereum would provide. So this is definitely not the same beast. In here, the average value would pretty much be between the top and the bottom, somewhat of a $5 billion. So if you take Monero, for example, that requires a 70% increase in price to go back to these average values. Is it going to be making it or not? I mean, I would tend to say, on the other hand, Cardano requires a 4x, so kind of a 400% return on investment, where the others, like Monero, for example, which has kind of similar structures, tend to require far less than that. So that means, frankly, I think Cardano has more than 5 times less probabilities to make it than Monero's and others like it. So that's really the way to go. That's how I define probabilities of success out of the actual underlying price structure. Okay, we're looking at long-term charts in here. I'm never going to go down anywhere below the weekly. So really the way to go for this is to say, well, this is where value plays out. Fuck the prices and stuff like that, and fuck dilution. You're going to have to look at the market caps. This is where the value plays out. Though the probability for the value of Cardano to retrace back to the mean and play that kind of K-shaped recovery stuff is 4 times lower than it is for Monero. That's the way to go, okay? You can disagree with that. All I'm saying is this sounds pretty straightforward. Now moving on next, what do we do with the other ones? The ones that don't have that much history, that weren't there in 2018 and kind of somewhat appeared in between 2019 and 2021, okay? That have experienced just one single cycle. Though among these guys, we would see the Solanas and AVAX, the aforementioned ones. So here's what they look like. Okay, so pretty straightforward in here, absolutely no trend. As you can see, the context boxes have gone through the roof, absolutely no ranging. It's just basically there's no way to frame this thing but to use a logarithmic chart. And I told you so, anytime you put a log chart to put some sense to the value, that means something went wrong. This is either a speculative bubble or an absolutely outrageous market excess. That means, well, the best we can take out of these kinds of things is to say, well, the odds for this to create a trend out of this absolute outrageous market excess is very limited. That means the best these assets can do now is to deliver on the absolute outrageous promises they traded with. To me, this is absolutely inflated expectations with unmet deliveries. So the thing is that now these assets that traded like that, and I would say Solana, AVAX, and some others do trade like that, you would see their similarities in terms of architecture. The way to frame these is to, of course, once again, look at just these indicators. It's just, these are meant to assess value over time. And as you can see, there's no value settlement. These things are just blown up and down. And now we've settled the value, and we can see that there are huge resistance coming along the way with the $4 billion area. Reason leading me to believe that if Solana is ever delivering on the false promises back then, that means they have to deliver, and I frankly think they are, and that's what the chart says. It's going to go back to this mean. So I think in terms of K-shaped recovery, this kind of absolutely mind-boggling over-speculated assets with unmet deliveries, therefore, I mean, future promises. There are 2 ways for them to behave in the future. The first one is they're going to deliver on the promises, which I think Solana is actually doing now, and the chart says it, are going to go back to this average value. And then 2 things can happen. Best case scenario, they're going to stay there. Frankly, I think the probabilities for Solanas and AVAX to go back to all-time highs are close to 0. Because, not close to 0, I would say they solely depend on one thing: having the ability to create an actual S-curve breakthrough. That means they need not to just deliver on the promises, but to break through out of the rest of the competition by doing something and critically improving their workflow in a way that no one else will be able to catch up again. Just like for now, I think Ethereum Layer 2's adoption is just skyrocketing and plays out this breakthrough technology for Ethereum's adoption. I wish Solana will be able to find similar stuff. In terms of actual raw economics, there are very likely a chance for this not to happen. But simple reason being, if you try to pull in millions of transactions into a blockchain, with limited to no costs for these transactions, the overarching problem is, what the fuck do we do with the data? If you want it to be decentralized, that means there needs to be tremendously multiple copies of these immense data sets. And who's going to pay for it? That means, frankly, I think Solana is a very good project and we need a fast and cheap blockchain. But that also means if you pull that out into the real world economy, when you have something that's fast and cheap, it's generally margin inefficient. That means these blockchain will not be delivering profits. They will just, at least if they can operate neutral, that means revenues are equaling expenses, I would say this is pretty damn good. So I think Solana is a very good project, but not for an investor. So I would say the best for now for Solana is to deliver on the promises and keep and hold somewhat of a $40 billion valuation. Though I know some people will say, what the fuck is it saying? I mean, this is the future of it. This is like the NASDAQ. Yeah, but do you know the NASDAQ market valuation is somewhat like $30 billion? So I would say $40 billion valuation for an asset isn't something negligible. It's very much the sign of a tremendous success. But I would tend to say, not all assets tend to behave like that, like create an absolute massive bubble. And we've seen that model all around using the same old stuff as the models that I shared multiple times before. It's just to say, okay, of course, some assets will have that S-curve breakthrough, but they are the absolute requirement for this asset to go all-time high again. Otherwise, just by the peak of hype, if there is not this yellow curve, which is the S-curve performance breakthrough, all there is adoption. And if you have hype, which is never going to be back to where it was, and adoption, as you can see, the chart will take much longer time to eventually go back to all-time highs by summing up the underlying area below these prices. So the only way it goes and go higher is having S-curve performance breakthrough. TLDR and here is, I think the only way Solana can go all-time high through the next cycle is for them to have a technological breakthrough, somewhat something like compression or something like that, but not just reducing 20% storage space. I'm talking about breakthrough, like something like breaking at least half of the storage space. If they can score that, then I think Solana can have a profitable revenue model. Otherwise, just pull a shitload of transactions at cheap prices, well, it's just going to be not meeting the underlying economic demands. That means you're going to have a shitload of expenses for little to no revenue. So if you can at least get it to square out to zero, that's even good. But frankly, I doubt this breakthrough will happen. I hope it will, but I think it's going to take much longer than the outrageous people's expectation. I think if Solana ever succeed on delivering massive compression improvements, I think this is somewhat years in the future. I can be wrong. It can still happen. Like I said, I don't know the future, but I'm saying the probabilities, okay, risk-reward probabilities of this to happen in the following year is unlikely. Though I think Solana, as it's best years already, it's going to go back $40 billion, and nothing else is to be expected on my end until we get a technological breakthrough. And this one is hard to get, frankly. When it comes to AVAX, as you can see, same absolute pattern. Absolutely no structure to the upside, through the roof, no value being settled. As you can see, the context boxes are just broken all over the place. And then as we go back below the falling moving average, this is where the value settles in again. Of course, right now we're trading at pretty much depreciated price. And as you can see, this is exactly the same stuff in terms of value structure than what we've experienced with Solana. The difference is Solana is already there, AVAX isn't yet. So there are two things that are going to happen for AVAX now. Either AVAX is going to find its market share. I've always said compete with Ethereum is an absolute shit show. You don't want to be doing this. You want to find your own set of market shares. If AVAX succeeds in finding a suitable market share for its actual very good technological blockchain stuff, well, I think it will go back to this actual median value, and K-shaped recovery stuff will happen just like for Solana. There has been absolute overhyped expectation for this project, and I doubt it can sustainably break all-time highs this cycle around. The probabilities, okay, are still a bit higher. Remember that Solana has been trading somewhat like $80 billion, where AVAX has topped out at 30. That means if for whatever reason the market share AVAX is able to figure out and to really thrive in this new market share, and I've always said I think AVAX could be an absolute mind-boggling good use case for social media, decentralized social medias. If it ever goes down this path, well, the amount of money that can be derived from these models is tremendous. And there I would tend to say, though for the case of AVAX, I would say if AVAX find a very, very rewarding market share, I think this model can succeed. Otherwise, well, frankly, back to the mean, and you're first gonna have to do this, and that's hell of a distance. Remember, in here we need to go $14 billion out of 4. That means we need to pull out a net 3x. Once again, that means out of assets like Monero or so, that just needs to pull out a 70% upward move to get to these areas. In here we need to do it 3x, though the probabilities for this to happen are correlated to the price movement. That means, of course, if you see AVAX surging in the following days, that means their probability are traded by the market has significantly improving. But I doubt this will happen below unless there are true reasons. Once again, these pump and dump schemes and stuff like that just can't happen on these big market caps. Only value can move them. So I wish Solana is going to find their market shares. If they do so, I think the only way to be sure that the market takes it correctly is by looking at the price. If they start to rise and therefore diminish the returns needed to go back to these areas, that means the probability of success for AVAX is improving. Am I bullish on AVAX? Frankly, I am, but I wish this market cap will be found. Until then, competing with Ethereum is a lost battle. Ethereum has already won that battle. It has reached out the maturity stage of Pareto effects. That means it holds more than 60% of the market shares when the second in line holds less than 20%. So there's not a chance, significant statistical chance to reverse course on these types of overarching supremacy. It can still happen, nothing is guaranteed for sure, but statistically speaking, the odds to reverse a Pareto effect are close to 0. So stop trying to eat away Ethereum's market share. There's no way you can win that. Just try to find your own is what I would tend to say to AVAX. But I'm believing in it. I think AVAX will find its way out of this eventually, and I'm willing to allocate some capital to this, but of course limited market shares, but we're not here for trading, okay? What we need to take out of this is that Solana and AVAX have both the same price structure, a falling moving average today, an absolutely outrageous value pricing in the up move, a violent reversal to the bottom, finding an absolute oversold condition, and now retracing back to the median value. What we can say is that Solana has already proven to be market fit on its sector of high performance, low cost chain. I doubt this is a sustainable revenue module, and I explained why. Now AVAX has to pull some 3x to confirm its viability duration on the market. Otherwise, yeah, it can just die out. Once again, there's no room for everyone. If you can't find market fit, you're going to die. Despite the tremendous good technology that AVAX is, it can be copied. Remember, there is nothing not to be copied in open source technology. There's no way around that, okay? Finding market share is absolutely required to survive. Okay, and then there are the other ones, which you can see have different kind of structure. I would tend to call them the third kind of bucket. The third bucket is assets like that, who have gone to the upside, not outrageously. That means, if you look at it, let me just remove the prices, okay? So you can see there has been intermediate constraint, intermediate ranging. So this is somewhat excessive in the end, but frankly, here you're gonna have to believe me, okay? There is a structure for this. It's called a multi-time frame trend. That means there are multiple breakouts offered in multiple time frames in the same time. And that creates those excessive market to the upside, but this is a trend structure. This is nothing compared to a bubble or an overhyped stuff like it has been the case for Solana and AVAX. In here, there is a reason pushing the prices to the upside. As you can see, the difference between those two is that as you stabilize the value post the bear market stuff, first of all, there is a two-step consolidation in here, not just a single flop. It's gone consolidation, taken some time. This one has been building its market up way earlier. And then, as you can see, second stuff is that we never trade below the moving average. And the moving average never flattened out. It's not even falling like the other and trading below. We're trading across a rising moving average. And the price has never dipped below. So this is crazy fucking bullish. And like I've always said, I don't see any chance that Link doesn't go back to the mean. It's here now. It's already there. Question is, are we going to range there? I definitely think so. Is it going to go higher or lower? Depends, once again, on the revenue module and the market shares. But I think Link has likelier chances now to range for an extended period of time, and success or failure will depend on the resolution of this tricky $10 billion area for Chainlink, okay? But this is really tricky, not so tricky to understand. There has been a trending pattern in here, which I know. I mean, there's a structure to this market going up. That means the value has spread it across these true prices. We haven't gone to $80 fucking billion valuations or so, okay? Though this thing really settled its value out of $10 billion, going back to this $10 billion was almost granted, in my humble opinion. Okay? Though other assets that have kind of similar but underperforming value is Atom. Of course, don't have a look at Atom USD. There is inflation in here, so you need to look at the value by looking at the market cap. Here, same thing. As you can see, the value isn't spread across like shitty valuation. You can see that there's been some underlying ranges, building some certainly very high prices as well. But as you can see, the value wasn't exorbitant in here. $10 billion, I mean, when, like we said, some others made 8x that for absolutely no reasons. But still, that's the way to go. In here, same story, as you can see, rising moving average and then flattened out. As you can see, Link was slightly higher than this, rising, where, as you can see, Atom is flattened out. It's succeeded to trade slightly below, but as you can see, it doesn't really hold very long. So I would say in here, probabilities to go back to the median value are just as similar as Link, but the market isn't pricing their actual real market probabilities to succeed just as it is for Link, as Chainlink is already there. So the fact that Atom is lagging doesn't mean it won't do it. It just means for now the market is trading it as a discounted probability, because where Chainlink is already there, okay, Atom still needs to pull a 70% to get there. Once again, 70% is one of the lowest moves that we've seen to get to this actual median value. We've seen Monero is very likely in a similar stage, but Monero doesn't have a bullish trend structure. What we can see as well is that we've retraced the breakout area of this first forthcoming trend, which tells me that if there is ever a trend with Atom, it's going to be give it a second, yeah, alternate trend structure. It's not going to be full upside mode. So there's one thing I can tell out of this is that if Atom pulls a new all-time high out of this thing, it's not going to go anywhere higher than a 1-to-1 ratio. So I think there are very likely chances that Atom will top out of somewhat $25 or so billion. Okay? Of course, speculation can push it higher, but the value will likely not settle durably above somewhat $25 to $30 billion for Atom. Okay? That's due to the trend structure there is, which is kind of actually very similar to what we have seen before for Ethereum. It means like, well, we've gone up, down, retraced to the breakout level, we go up again, and we rarely succeed in holding prices above 1-to-1 ratio. As you can see, we've tried a lot, and then we pull back to the overlap level. And I think Atom kind of probably will do the same. That's my hunch, at least, for Atom. Let's try to wrap it all up together now, okay? So we've seen 3 different types of structure. There's actually a 4th one, which I'm quickly going to go over. There are all the other type assets. Like, you take this, I mean, this is actually full of shit, so let me be real clear, okay? This isn't a range, and this, that just happened recently, let me just remove all this thing, it is nothing but a pump, okay? So once again, do your fundamental analysis. The value needs 4 criteria to move. Okay, the prices needs to move through time. That means if there is shitty volatility, like the asset pulled a 15x in just 3 months, fuck it, that's not value. That's prices moving, not the value. So it taken too little time span to happen for this to be actual value moving, okay? The 3rd factor is volume, okay? And the 4th and very critically undermined factor is a portion of supply circulating. That means if in here you would understand that by doing a simple on-chain analysis, you would figure out that just 4 wallets have accumulated somewhat 60% of the supply throughout the latest few months. That's the definition of a pump and dump scheme. So this is not value. These things have worth absolutely nothing. It's going to go back to earth very violently. So don't ever call this member of the back to square one of the K-shaped recovery stuff. This is absolute mind-boggling, stupid speculation and price manipulation. Don't ever call these ones to be the K-shaped recovery. Nothing related to value in here, okay? So bear that one in mind. Volume, share of significant circulating supply, and stuff like that are only required for this to be considered value. This is just fucking bullshit. There are other type assets like injective, been outrageously going higher as well, as you can see, multiple pumps and things in recent history of time. Though in here, I would tend to say, don't look at the prices. That's the number one mistake that I've seen being happening recently. So just look at this. I can see, I invite you to use like ChartConTrader Pro, which is pretty great. It's pulling out the chart history from CoinMarketCap. And in here, you would tend to say that Injective as a market cap in here just tells you a very good story about the value of Injective. So even though this one, like we stated, has gone pretty damn fucking high in a short period of time with limited volume compared to history, and once again, very insignificant portion of the supply has been moving, or at least it's been concentrated in a few hands. So same story, this is and value, okay? But in here, the difference there is with Teller, which has absolutely no underlying structure and is clearly being manipulated now. This isn't the case for Injective. That just means in here, very few hands have been concentrating this value, and now that they're probably going to take profits, it's not going to be pretty. But that doesn't mean this asset will crash back down to earn like Teller. Teller is a bubble. It's going to go down to zero. It serves absolutely no real purpose. If you do just a single bit of due diligence on the project, you'll easily figure that one out. Now, Injective isn't the same thing. This isn't a bubble. This has real market case use fit and stuff like that. And it is visible through prices. As you can see, there was a first upside move. There is ascending bottom in here. We haven't just gone back down to zero. And then we go up again. Though that means there are multiple breakouts in the same price structure. This can only be one thing. Once again, just like Ethereum and probably Atoms and the like, this is generally what we call an alternate trend structure. That means this isn't the kind of things that just go up forever like that. It's probably going to fall back down to earth, trade at the overlap, and this is where I'll be damn ready to buy Injective. Though, once again in here, this is, I would tend to say, the fourth class of assets. The ones that are clearly not in the same league. They have lower cap valuation and they've been pumped hard, either in absolutely mind-boggling pump and dump schemes like Teller, or in here, over-concentrated speculation while still being and having underlying value. So don't mix up these two, okay? To me, that's kind of five categories. The absolutely outrageous, mind-boggling, stupid speculation and price manipulation, and over-speculation on limited supply like it is for Injective, which obviously will dilute again back to value. And on here, we're talking about an asset that's trading at a $1.4 billion. That's more than half what the Cosmos Hub is doing now. And going back to the actual value that I said is $600 million, which is, goddammit, a successful project. If you're waiting for $600 million, that's really, really valuable. And I think this is where the value is for Injective. So for these kinds of assets, don't ever call that a K-shaped recovery stuff. The value is below now, and we're going to go back there. So don't buy Injective. It's just that doesn't mean this asset is worthless. It just means, well, it anticipated forthcoming benefits. There's nowhere now to go but losses. So on this thing, it's just don't buy it now. That doesn't mean sell it. It just says, just don't buy it, okay? Wait, you're going to get better prices at a distance in the future. All right? So now that we have it all, let's sum up all those four categories, okay? So the first one is the longer-term trending assets. Some have some very bullish structure like Ethereum, and I won't change my mind until the structure itself changes, which so far we did not. There are some longer secular trends like Bitcoin, which don't have structure. They are just undermined denominator destruction of the dollar and euros and stuff values. And so long as it keeps going that way with higher highs and higher lows, there's no reason to fight against it. It would be stupid to do so. But we've noted that we're kind of some early alerts by the fact that we've held a quarterly close below the moving average on Bitcoin, which tells me that we might not want to expect tremendous rewards for the cycle to come. Diminishing returns seems to still be the case for Bitcoin. The pace of the increase is slowing down. That doesn't mean the rewards are not worth it. It's probably the safest asset out there, but that also means the rewards will diminish over time, which is damn normal. Though Ethereum, longer-term trends, so long as they're not invalidated, and so far they're not. And there are the other ones, like the overarching extended stuff, like the Solanas, AVAX, and stuff like that. But we've also seen, the Moneros and Cardanos and Ripples alike, which are not trending on the monthly charts, and they already have been through 2 cycles, and the structure of those 2 cycles doesn't create trends. They're still somewhat neutral or bullish, depending on the structure they have with their moving averages and their tops and bottom structures, but they hardly pull out trends. So they are far less strong than the Ethereums and Bitcoins. But there are very likely chances to go back to their median value. The respective probability of them to perform that action depends on the distance there is with this area. The ones that are closer to this are probably going to be doing it. The other ones, less likely. Okay? Then the third class of asset are like the atoms and links. They have been pulling some trend structure in the 21 cycle, haven't gone through overarching excesses, and now are retracing to the median value, and the distance to these areas is the probability for them to happen. Chainlink's already there. I think Atom is going to pull it as well. And for now, it's just pending. It's waiting for a 70% pump to get there, and I think it very likely will happen. When isn't the matter. Once again, Don't try to time the markets. This is the third category, okay? The fourth category, like the AVAX and Solanas, they are now falling moving average and they've traded significantly below during this entire winter season. Now that spring is over, they probably will try to return to the mean. Their probability to experience another summer is close to zero. Everyone has been sunburned and frozen to death in the bear markets. So best case scenario is back to the mean and staying there unless there is the very limited chance to have a technological breakthrough, which is still possible, but very less likely. For the AVAX case, there still needs to be a 3x to get there. That means the probabilities for this to find its market fit situation is for now depreciated against Solanas in terms of market prices. I hope AVAX will be able to score that game sooner rather than later. And then there are the remaining two categories. The absolutely outrageous speculative bubble. Just sell that shit as so long as you can. These things worth $0. Time will only lead them closer to that end. Just don't hold these fucking assets. Sell them if you've bought them. I don't know, so many shitcoin traders out there that just gambled on the 10x stuff. If you've managed to make a 10x on Teller, fuck, take him. It's really the simplest thing I could ever say. This thing's going to zero, and if you want to gamble against me, good luck with that. I think I've already started to win that game. When it's injective, well, that's another story. It's just a different thing. The underarching structure for price just says this thing is bullish, but all the gains have already been made. So in these particular cases, the only thing to do is to be rational and to say you either wait for the prices to pull back to value and you buy them, or you let it for someone else. But you don't jump in a boat that's already left the quay. That's really the way to go, okay? These are the 5 classes. You have all the technicals to suggest how to perform the analysis on them. These are the assets that I do trade. That doesn't mean this is the limited assets to list to study. Take your own portfolio and study them one by one through these lenses and try to take the best out of this podcast. Don't do as I do. Just don't try to blindly copy me. Just stake on the real value there is out there. How do I get to the conclusions? You can use different indicator sets or whatsoever. Just transpose that to your own trading strategy. But you need to have just as much details in those assessments as I do. Otherwise, you're just gambling, folks. Okay? So try to sort things out. You have a limited amount of money. Just don't spread it all over the place. Take it on the valuable assets. How to define a valuable asset is just exactly how I try to perform today. I've shared my way to do it. Find your own and inspire from mine eventually. That being said, I'm going to wish you all a pleasant end of day and a pleasant weekend. See you guys later. Bye-bye.